Hello, fellow traders. Now, this is not really so much an update about the current trade situation that I have going on. I just have it up so I can kind of show you that we're still waiting on that. So, this is kind of the longest period of that part of the trade. We're just kind of waiting to see. We didn't get any reversals out of here, so we're just going to wait and hold to see what we may get. Our current break even for everything is around this range here. So still could easily come back and see that on a retracement. We've got some pretty wide targets out and about on the Euro USD. Some are saying below parity, and we've also got one call out for about 115. So it could go either way, of course. So we're just gonna manage that along, and right now we're just in a holding pattern. Our last entry was here, so we've been going through all of this time not making any trades, but today, while we're waiting on all that, I just want to talk to you about one particular topic that I think may help a lot of you out. It's something that I've kind of realized and kind of thought maybe was a little bit common knowledge, but I'm going to try to point it out, to try to clarify what it is and show you how just having a little bit of common sense about the market in general can actually save you from losing a lot of money. Now, for those of you who are just finding the channel, welcome. Make sure you subscribe and leave a like on the video. That helps the algorithm show this to more people and find more new viewers and help other people from basically blowing up their accounts and losing money on just dumb ideas, because there are so many dumb ideas on YouTube that just do not mathematically work. So what I'm going to talk about today is not so much a trading strategy, but a little bit of knowledge that you can apply to your strategy to actually stop it from losing so often. Now, I know a lot of people don't like to look at these higher time frame charts, but even if you're looking at a 5-minute chart or a 1-minute chart, the same thing is still the same thing that I'm about to show you still applies. So in the market, we have these blue lines vertically. They represent days. And on each day, we're going to take just any particular day and take a look at any of this, of what's going on. But basically, if you look, you can really say that the price hasn't moved if it's still at this same level, because we're always looking at price in the up and down value. The only reason we have this chart is so we can represent how price changed over time, but price still moves up or down. It doesn't move sideways. So we're moving up and down in this area, and I could probably use a couple of tools to help point things out. So we've got our little price area here where price is moving around. We also have another area down here where price is kind of moving around but not doing a whole lot. So we have two different areas. In order to go from area 1 to area 2, we made one move. So when you start talking about all these different short-term strategies and trying to scalp and making multiple trades a day, well, you can argue that there was a move here and a move here and move here, move here. There's all kind of ways you can justify a move, but when you start adding in your cost of trading, such as commissions and things like that, your wins are going to be much smaller than what this looks like, and your losses are going to be much bigger. So if you guess long here, get that wrong and stop out, then you go to guess short here, get that wrong and stop out, you're paying 2 commissions and you're taking 2 losses of a trade. Now, if you try to account for your loss in that commission, in that short and that stop out order, then you're going to get hit much easier in regards to getting stopped out. Because notice here, how about you just leave me alone while I'm recording? Because this move here, clearly, if you went short, you got stopped out and it went there anyway. So that's kind of the problem that kind of leads to what I'm about to get into, and that's basically the market is only making so many moves. Now we can lose our money very quickly, kind of what I'm talking about here, because price didn't really move. Yet we could take 2, 3, 5, 7 trades in here. Price never moved, and we just gave away our money. So if the market is making between 1 and 3 moves a day, we should only be trading 1 to 3 times per day. I would probably say try to look for no more than 1 to 2 trades per day max. Because if the market isn't moving, you're not going to make money. If you're going long here and it starts to drop and then you switch to short and it starts to rise, you switch to long and it starts to drop, you switch to short. All this time you just gave away 3 commissions and 3 losses when all you had to do is take one position, wait until price leaves the area, and then close that trade in either a win or loss. So that's 1 trade, 1 commission, and 1 loss or 1 win versus 3 losses before price even decided to go anywhere. So, you know, it's kind of like the whole situation. If you have, 3 kids and you have 5 apples, well, 2 of those apples are probably not going to get used. And those 2 are going to get thrown away. Well, these trades didn't get used because price didn't move. So those apples got thrown away. You're throwing away money just by trying to trade these little short moves, when in fact the market only makes between 1 to 3 moves per day. Even if you're looking at it on a 5-minute chart, there's a lot of ups and downs, but again, we have our same kind of situation here where we're looking at price didn't really do a whole lot outside of this range, and it even got a little bit wider at points, but that's our range. That's our 1 move for the day. So 1 move, 1 move. This one didn't really so much make 1 move, but you could also argue that maybe it made 3. So we were here in this area, we made a move, and we would have to measure that, because a lot of times when you get choppy price like this, especially like in this little area here, like so, you could argue that that was one area, so that would be a move, which would be a small one for the day. And then we've got this area here, so this is how you could possibly argue that it made 3 moves, but these are small moves and it's still only about 3 moves. So if you had taken about 5 trades here, you may have wasted 2 trades. Same thing here. We open, we kind of made a little bit of a move, but didn't. It's kind of in the same area. Then we've got 1 move. You could argue 2, but that's going to happen so quickly that you're probably not going to be active for that or have any kind of understanding or reason. Unless you were waiting on a retest for a level, then you've got 1 trade here for 1 move. If you were entering early or entering in a Tokyo session to trade for the day, like a lot of times I may just take a trade open for the day and try that out. You're looking for that 1 move. Now, price on this day didn't really move. It opened and closed at about the same price. It kind of made a little bit of a move, tried to, but didn't really go anywhere. In this case, we're looking at the same thing. Price is kind of here. You could argue and say that it made 2 moves, but it made the same move basically twice. So you got move 1, back to where it was, move 2, back to where it was. And this could even potentially be viewed as 3 moves. So 1 or 2, 3, and 4, which would be a rare occasion, but for the day itself, it only moved from here to here. So it didn't really move that far for the day. Now this is a steady single move, 1 move. So there's a lot of ways you could try to scalp this for small, but your odds of getting these correct versus trying to trade just 1 move are going to be a lot different. You're going to take a lot of losses, and who knows, you never know when you're going to end up with a day like this or like this, where it just goes flat. So, like typically you could have, let me put this on just plain UTC time, it makes more sense. So when we come and open our day, we have our Tokyo start here. Tokyo, most people do not trade with until that goes, but then you have it about 7 o'clock, the London opens. We didn't really do a whole lot for London. Then New York comes into play. pre-market, and then New York. So New York had basically one move, and then it retraced to finish the day to make two. So there, you can see each day there's very limited moves. So this would be counted maybe as two, one, two. You go up for one, down for two. That one wouldn't really say it did a whole lot that day. Same thing here though. You got the one move situation. You've got consolidation. Price kind of stayed the same. It's not trending. It's not doing anything. Then it makes one move and doesn't really do a whole bunch else for the rest of the day. Same thing here. You kind of make a little bit of a move, comes back, and then kind of chops up a little bit, and then there's your one move, maybe two. So that's a maximum of three that day. Then you've got more of a flat market here, didn't really go anywhere, and then we have our one move for the day. Same thing here, consolidation, kind of flat, one move, maybe two, because that is kind of a long move. This one here, two, maybe even possibly three. So you got consolidation, move up, that's one, move down, that's two, move and kind of stay in the same area, then shoot down a little bit further is three. Same thing here, one, two, three. And here, price looks like it could have made multiple moves, but mostly it made just one move. It went up, kind of retraced a little bit a couple times, pushed straight up hard, and then finally stayed up. Same thing here, we kind of opened, we drifted up a little bit, so maybe a small move there, came right back to where we opened, made one actual kind of move, and then made a second move, so that's about a two move day. Same thing here, open up, one major move. Here, you had one major move down, one major move up, and then a slight back retracement down, so you could possibly say there were two moves that day. This one kind of just stayed flat. Maybe got two good little motions out of it. May have been able to catch something here to there. And you just keep going and looking like that. Two moves, maybe three. No moves, maybe one if you're catching from an extreme to go up or down, but there's maybe one opportunity there. One move, consolidation. One move, not very strong, and then came right back, so maybe two. Same thing here today, kind of flat, one move. Kind of flat, one move, maybe two, kind of flat. Here, not so much, maybe a weak move, so just consolidation, weak move down. Same thing here, open up, consolidation, one move, down. So, I mean, you can see over and over and over again, we're only getting between about 1 to 3 moves per day. So just by simply limiting yourself to 1 to 3 trades per day, you will not waste all these apples every day and have no account left at the end of the week. I mean, it just happens over and over. Consolidation, one move. Maybe two here at consolidation, move up a little bit, move back down, move number two. Same thing here, consolidation, move, consolidation. Consolidation, move, consolidation. Consolidation, move, stop, consolidation, end of the week. 1 to 2 moves per day. So, I mean, it's very easy to give away a bunch of money just by flipping back and forth. You're taking small losses, you're also paying your commissions, and if you think you're not losing money because you have a spread account, I assure you, you're still paying commissions, but you're also paying the spread, and that's accounted for in the spread, and you've also got to deal with more spread volatility. So that's why I kind of recommend commission accounts over spread accounts, because the price is a bit more stable and much better, and one way or another you're paying that commission. I've had a lot of people argue with me and say that no, I have a spread account, I trade for free. No, you do not, because your points are worth money as well, and you may not be paying the commission out of your account, but you are definitely paying that commission out of the win, and you're paying it more on top of the loss. So either way, one way or another, you're paying. So one of these videos coming up is going to be about cost of trading. We'll get into the details of how that actually works, but it doesn't matter how it's advertised, spread or commission, you are paying to trade. So that's one thing to account for while taking your trades, spread or commission. And then also, if you take a win, your commission comes away from your profits. If you take a loss, you take a loss plus more money loss for paying that commission, because you're still going to pay it win or loss. And this is actually going to cause a lot of issues with your risk to reward ratio, especially when you're trading in 5 to 10 pips. Because yeah, there's a lot of moves we can get for 5 and 10 pips, but the odds we're going to get all of those, or even just a few of those, are very slim, and we are going to pay through the nose to try to get them. So the only person that gets a benefit from us taking more trades than moves available on the chart are the brokers. So by just slowing down and just minding how frequently you're entering the market, you will realize that more trades actually do not equal more money. It kind of sounds the opposite when you put it out on paper, but when you actually put it into practice, or even just look at a chart for what it is, like even here, these little moves, there's no way you can determine where these are going to happen, or if they're even going to happen, until after they've happened. So you're basically shooting yourself in the foot over and over and over again every day, trying to catch these little small moves, when in reality the market's only making 1, maybe 2 moves a day. And just by limiting your entries, you can save so much money, and your account will go so much further. This will also give you more opportunity to get more right. So that's about it for this video. That's kind of the one main topic I wanted to hit on. It's just a little common sense. It can save you so much money at the end of the day. Even looking out at the hourly, remember each vertical line is a day. I mean, it's a little bit clearer to see one move, no move, one move, one move, one move, one move, one move, one move. So I mean, it's just 1 to 2 moves, maybe 3 tops in a day. So just keep your trades to 1 to 3 trades per day, and that just by itself should save you so much money. So I'm going to go ahead and wrap this up. We're still just going to be waiting. We could be waiting another week or so on this trade without doing anything. That's fine, because I've got way too many things to do right now. I was starting to look at a script to try to work with the other strategy, because as I was live testing it, I started to see a little bit of a weakness in the overall setup and how it was working in its overall mechanics. So I was starting to think maybe write some code and kind of reuse some of the other stuff from another widget that I've got here, and I've also got to kind of work on that later. So that's still another project. Don't worry, I haven't forgotten. I know I keep promising I'll get to it, but we've got to basically rewrite all of this nonsense down here, because there's a much better way to actually code this out to where it works a bit more efficiently. So I've got a few other drafts I'm going to have to pick through to get that figured out, which one's working best. But for now, we're just kind of working with what we've got, and I've decided to take this idea and put it into a spreadsheet, because it'll be a bit easier to work with in the long run, and much simpler to actually get to the result I'm looking for. For the meantime, I'm just going to keep working with that, waiting on this trade, and just carry on, only using what works and what makes sense. And one thing that definitely makes sense to me is that we should not be trading more than about 2 to 3 times per day. Any more than that, and we are very likely to be losing without even looking at a P&L report. I mean, just based on what we saw here, if I told you I took 12 trades that day, just based on what you know from this video, you should automatically know right off the bat that I lost money if I took 12 trades that day. But if I told you I took 2 trades that day, it's very likely I could have made money. And that's the whole trick behind applying just a little bit of common sense to keep your account going positive instead of negative. Because if you're constantly flipping back and forth, you're just giving money away. If you're trying to take 8 trades a day, you're giving money away, and you're missing the main move of the day. The main move of the day is going to give you the highest payout for that trade of the day. And if you're taking 1 to 2 trades a day, then it's very possible you could be catching that one move of the day or most of it and making something of it. So just kind of slow down a little bit, stop hitting this button so many times, and that should by itself make a drastic improvement without even changing anything else about what you're doing. Because not only are you losing less, but you're saving money by just using a little bit of sense. So that's all for this video. Before it gets too long, I'm going to go ahead and get it posted. But I appreciate all those who've given support, and just make sure you leave a like on the video to help others find it. And for now, I'm going to wrap this up and just kind of get back to living a little bit and doing some more research into what I need to do. If I need to write a new function in order to work this out easier, I will. But I'm still kind of working with the numbers to see which is the most effective way to solve the little issue I'm running in on that live test strategy that I mentioned I was going to be working on. So that's kind of in the works, and I've got a couple other ideas as well. So you know, I never stop learning, never stop looking, because who knows, the next big thing could be right around the corner. But for now, I'm sticking with what works and only adding in anything else as long as I know for sure it's going to be effective. That's also another kind of common sense thing you can do. But for now, I'll see you later. Don't want to go on forever. So, yeah.